Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 9th of February. So I've seen some really good action this week. The S&P 500 hit an all-time high and a very significant milestone. And look, even the currencies have really played the game in terms of hitting important levels. So we'll jump straight into the analysis and see if we can find any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and you can see that we've seen that weakness really start to set in over the last 24 hours or so. It's a very obvious big head and shoulders pattern that is trying to play out here. We've already seen the break of that neckline and a retest of the neckline now from below. You can see here that we've got this little shooting star candle come up and touch the 65, basically 40 to 45 area, and then started to sell off again. This looks to me like it could be in proper trouble if we do get a daily close below that 64.70 area, because really there is very strong support here. You can see all of these peaks and big wicks are touching this level very often basically in the last 12 months. And if we actually get a break of that level, so if we get a daily close below that level now, you would think there's not a lot to catch it. Considerably falling all the way down potentially to around that sort of 63.50 to 63 cent mark. So it's a very important time for it. It's trying very hard to sell off, but there is resistance at this point for a sell off. So if we do get the break and the daily close below here, we would start to be concerned about the Aussie in terms of the pattern actually not. Well, it's not really a concern if you're shorting, but if you are trying to go long, that support level is in dire peril if we do get a breakthrough here. So if you are looking at shorting opportunities, look, the pattern is well and truly in play. And if we do get a close, to me now, if you're not already in, I mean, you probably could have already been in already from basically the break of the neckline. But if you're not already in and you're looking to join in, a daily close below this level here would give us the confidence that it's probably going to continue on and we're going to see a further weakness in it. Of course, it's US dollar dependent, but we'll jump straight into that shortly. But so far, so good. And technicals are playing very nicely with what we're really anticipating what will happen with the Aussie. All right, we'll move over to the US dollar CAD. And we've had a reasonable pullback to an important level here as well. Obviously, from last week, we saw that support held. This was the level of support. You can see we had resistance there and support there, and quite a bit of resistance through here as well. So no real surprise to see this kick off from around that sort of 133.80 level. So a pretty good move, actually. And you can see we hit the previous highs that we can see right through here at around that 135.30. It's pulled back a little bit now. It's back to the 20 moving average and the 50 moving average, but the momentum still looks pretty strong for it. There is definitely resistance in front of it. There's no question about that. But if we can get trading again and get a bit of momentum up on the smaller time frames, we could see these highs broken. So the first trade that you'd be looking for in this instance is a move back up to the previous highs at around that 135.30 to 50 area. And what we're looking for there is a series, of course, of lower highs and higher highs and higher lows on a smaller time frame. And if we get that, then we've got the opportunity. Look, if you go to the smaller time frame on this one, you'll be able to, I mean, if you go to a 1 hour even, you can see here that once we hit that little mini double top part, that's the part that was resistance, you can see that we had a pretty steady flow of series of lower highs and lower lows all the way down to this level here, which is support. So what we're effectively looking for is the reverse of that to actually get some momentum up. And if we start to see this on the way up, a series of higher highs and higher lows, and trading on and above the moving averages, that will give us the confidence that we can get back up to this level in the first instance and then push on higher once we get a break of that. But the very first trade we'll be looking for is a move straight up to there. If of course, the 20 moving average doesn't hold up and it starts to move down and we start to sell off, that's a different story altogether. We look at it from a different lens, but the obvious target's going to be that 133.80 again, because that's where obviously it bounced the first time. So good trading either side, but I think the momentum is more with the upside, so I'd probably prefer to be trading that direction. But of course, if we get the breakdown, we trade what we see. All right, over to the US yen. Look, the US dollar yen's been fantastic, really. It's done all the things we needed it to do. It found support at the level we wanted it to find support, of course, and it's kicked off really strongly. And then, a little mini pullback, but no real surprises there. And then off it went again. Similar to the US dollar CAD, yeah, if you're trying to enter a trade like this, what you're really looking for is the smaller time frames. You know the direction's obviously long. We've got very, very heavy momentum going that direction. And again, you can go to smaller time frames. I can go really small if you want to. And you can see once it started to track up, you've got the series of higher highs and higher lows. What we talk about all the time, pull back to the 20 moving average, as you can see, bang, off we go again. So really, really good trading, very, very technical. And hopefully you're able to get hold of that because it was a pretty good trade and really has done the job very, very well for us. There is, obvious resistance at that 150, no question about that. We're still about 70 to 65 pips off that at the moment. That momentum could certainly continue up to that level, but I'd just be looking for pullbacks to the 20 moving average on the smaller time frames, just like we saw. If you get that, then we've got an opportunity to potentially get it back to that level. If we see that reversal and start to trend down, the obvious pullback is to about that, around the 148.50. Okay, so you can see here, this green line here, obvious support right through there and resistance. So if we do see a bit of a turnaround around this zone, any shorting opportunities, I would be taking down to around that 148.50, and then we'll see where it goes from there. But good trading on the yen. All right, dollar index still very, very strong. We saw a big move last week, obviously off the 20 and the 50 moving average. It did exactly what we needed it to do, as you can see, and off it went. Basically now it's hovering around the level where there is very strong resistance. There's no question the 104 to 104.20 level. We can see it right through here as well. We've got very, very heavy resistance there and there and there. So no real surprise to see it, basically battling to get above there, but it has done a little bit more than it did at the previous attempts to go long, and it's come back now and tested it. Yes, it's come back a little bit off today's trading, but what we're looking for is a turnaround here in a series of higher highs and higher lows on a smaller time frame. If we get that, the very first trade would be up to the 104.50 to 60 area, obviously, but a break of that sees the 105 as the target. And really, even if it does continue to go short from here and breaks this zone, the 20 moving average is obviously the next catch point that we'd be looking for. So really, a 50-point move down to this level would be where we would be aiming our trades. The euro, of course, is the one we want to trade on that information because it's the easiest one to trade and direct inverse. It's doing its job really, really nicely. Like, it sold off the 20 and the 50 moving average cross, which is perfect. It did exactly what we needed it to do right there. It's a big drop off. It's a little bit of a pull up now this week. You can see a little bit of strength over the last 3 days, but a little bit of indecision sort of kicking in. That 107.80 to 108 area is a pretty strong resistance for it. So I'd be looking at probably reversals around that area. If we see a series of lower highs and lower lows on a smaller time frame, I'd be looking to continue the big downward momentum down to around that 107, which will be the first target for it. I mean, it got pretty close to it, actually. So, a little bit of a turnaround here, and I'd be scalping down to 107 as the obvious trade. Pretty good movements on the euro. If indeed it does continue on and we see a series of higher highs and higher lows instead, the 20 moving average and around that 108.50 would be the area that I'd be aiming for the long opportunity on that one. I'd be keeping my trades relatively sharp on the euro still and keeping them in scalping mode and just going for those key zones. And the S&P 500, the story of the week, it hit the 5,000 for the first time. It's a significant thing. It's never, obviously in the history of all of the US 500s trading, it's only ever hit 1,000 level, obviously 4 times in the history. So it is a significant event. It got the 5,000 this week. Look, where it goes to from here, it's been very, very technical on the way up. Very, very skeptical now as to how long it can actually stay up here and actually continue to move higher. It's going to be data, obviously related and economy related, but you'd think after such a phenomenal run, it's probably going to take a bit of a pause and pull back from this level. I wouldn't be surprised to see a bit of a pullback down to the 20 moving average, probably at the very least, but even potentially up to the 4,800. I mean, this red zone here is an extraordinarily strong zone that I'd be looking for a test of. But look, we trade what we see. I wouldn't be the first person to the party at 5,000. I'd be letting it break through there, and if it continues to trade above 5,000 and comes back and tests it from above, and it gives us a rounding bottom, then we may be looking at getting involved. But for me, I would probably rather leave it alone and look for shorting opportunities if it does indeed turn around and start to make a series of lower lower highs and lower lows on a smaller time frame, that would be the preferred trade. And we've got two targets to go for: the 20 moving average in the first instance, which is around the 4,900, and the 4,800 after that, if that level doesn't hold up. The long, to me, doesn't seem that lucrative at the moment. I think all of the fun has been had so far, and we hit the big milestone that we needed to hit. So I think we'll just, in my mind, we'll probably leave the long alone for a little bit and just let it settle down and let the market tell us which way it's really going to go. So I hope you had a great week's trading. We've seen some really, really good moves on the currencies like we saw. Hopefully you're able to take advantage of some of those. Have a fantastic weekend, and I look forward to seeing you all next week.